Hello, tech lovers, and welcome to the Wednesday edition of the Tech Stocks Daily Podcast. Get ready for a thrilling ride through today's biggest NASDAQ stories. We're diving into Google's turbulent waters, featuring a £5 billion lawsuit in the UK and hot new ventures into geothermal energy in Taiwan. Meanwhile, Microsoft is feeling the ripple effects from OpenAI's rumored $3 billion acquisition talks with Windsurf, stirring stock fluctuations amid solid financial foundations. Over at Meta, whales are making waves with dynamic investments while Facebook battles scrutiny over black market activities. Stick around for these stock twists and turns. Buckle up, tech aficionados, because Google is stealing the spotlight today with not just one, but two big splashes in the tech news swimming pool. Let's dive into what's making waves. First up, Google is facing a massive £5 billion lawsuit in the UK, and it's a biggie. A class action lawsuit claims Google has been a bit of a bully in the playground, leveraging its near-total dominance of the online search market to squash competitors, bump up advertising costs, and essentially leave UK businesses with slim pickings when it comes to search advertising alternatives. A law firm called Jaredin Partners is representing competition law academic or Brook and all those dissenting UK businesses that feel they've been force-fed Google services since 2011. The big question not even a Google search can perfectly answer: has Google really played Monopoly with search ads? Critics argue the company strong-armed its way to dominance, allegedly paying smartphone makers to stash Google Search and Chrome in their digital cupboards and forking out billions to Apple to make sure Google takes center stage on Safari. Google's spokesperson fired back, calling the legal move speculative and opportunistic, asserting that people use Google simply because it works, not because alternatives are locked in a vault. Meanwhile, across the globe on the tech energy front, Google is lighting up the news for a very different reason, something quite eco-friendly, actually. The internet heavyweight is bolstering its sustainability image by signing Taiwan's first corporate power purchase agreements for geothermal energy. This isn't Google's first renewable rodeo. Back in 2019, they launched a solar power investment in Taiwan. And now they're tapping into the literal heat of the earth, bringing an additional 10 megawatts of clean power to the table. Partnering with baseload capital, Google's geothermal venture is more than just hot air. It not only boosts Taiwan's geothermal tech market, but also showcases Google's role in pushing for cleaner energy. Let's be honest. When tech titans are previously mentioned as potential heavy contributors to global pollution, these strides mean more than just a green tick mark. The company's geothermal initiatives stretch beyond Taiwan, with projects sprouting in collaboration with Fervo Energy and Project Innerspace across Australia, Japan, and Indonesia. Google seems to be on a transformative quest, tackling environmental impacts while battling legal fire. It's a tale as old as modern tech, giants striving to balance market power with responsibility. So, whether it's jousting in a UK courtroom over search engine supremacy or unearthing clean energy resources, Google's headline moments offer something for everyone watching the evolving dynamics of tech world intrigue. Keep those browser tabs open for more. Hey tech enthusiasts, get ready for today's dive into the world of Microsoft and its eventful stock market performance. There's a lot to unpack, so sit tight. First up, Microsoft's shares took a bit of a nosedive, dropping 3.7% by the end of the trading session. If you're wondering why, it wasn't because of anything Microsoft directly did. Instead, it was more of a ripple effect from OpenAI, a company Microsoft has invested heavily in. Just as a fun tidbit, Microsoft and OpenAI are kind of like besties in AI tech. Microsoft has poured a cool sum of money into OpenAI and uses their tech in some of its own products. So what's cooking with OpenAI? According to Bloomberg's report, which cites an anonymous source, OpenAI is apparently in talks to acquire another AI firm, Windsurf, for a whopping $3 billion. Speaking of Windsurf, they specialize in AI-assisted coding tools. It's like having a coding buddy whispering prompts in natural language to make programming all the more breezy. Neither OpenAI nor Windsurf have confirmed the news, and Microsoft has stayed tight-lipped. Why does that matter to Microsoft stockholders? Well, if OpenAI does spend big bucks on Windsurf, investors might worry that Microsoft's sweet investment pie won't have as much icing. Simply put, some feel OpenAI, and by extension, Microsoft, might be better off using billions on developing fresh tech rather than making pricey acquisitions. Beyond the OpenAI drama, a comprehensive analysis by Benzinga contrasted Microsoft with its top contenders in the software industry, revealing some juicy insights. Microsoft displayed an impressive financial performance with key metrics such as its price-to-earnings ratio at 31.08, indicating undervaluation relative to industry norms. This catchy little stat might attract growth hunters who love a bargain. Microsoft also flexed its muscle with a high return on equity and soaring earnings figures, far surpassing the industry standard. However, not everything is rosy. Its revenue growth sat lower than some competitors, making investors cautious about future prospects. On the bright side, Microsoft has a solid financial footing with a lower debt-to-equity ratio compared to its closest peers. This indicates better balance between debt and assets, painting the company as financially stable and attractive to investors. In a nutshell, Microsoft's day has been a mix of anticipation and market watch drama, thanks to its close-knit relationship with OpenAI. While it wrestles with stock dips, its underlying financial health and lucrative industry positioning promise excitement in the long run. So, stay tuned, folks. With Microsoft, there's always another chapter waiting in the tech saga. Hey tech enthusiasts, let's dive into the latest buzz surrounding Meta platforms because there's a lot cooking on both the financial and ethical fronts. First up, Meta platforms, trading under NASDAQ Meta, has become the eye of a frenzy in the investment world. Why, you ask? Well, it appears that the big fish, the whales of Wall Street, are making some significant moves in Meta's ocean. An impressive 36 extraordinary options activities were highlighted by Benzinga's scanner today, suggesting that these deep-pocketed investors either see gold or smell trouble. Exactly why they're dancing around like this isn't clear, but historically, such activity usually means something's brewing. With a split opinion, 47% bullish and 38% bearish, it looks like the investors can't quite make up their minds just yet. Analysts are chiming in with price targets ranging from $600 to a whopping $710, envisioning sunny skies ahead. Meanwhile, on the darker side of the Meta universe, Facebook, Meta's crown jewel, is grappling with stricter scrutiny concerning the illicit trading of Uber and DoorDash driver accounts. A damning report by the Tech Transparency Project reveals that Facebook is hosting nearly 80 black market groups. In these groups, with a whopping 800,000 members collectively, Uber and DoorDash driver accounts are being traded like Pokemon cards. This development is raising critical questions around the effectiveness of Meta's content moderation policies. Mark Zuckerberg's platform appears to be struggling to shut down these illicit activities, and the saga is turning heads worldwide, especially since it adds fuel to the fire of an ongoing antitrust trial. Meta has had issues with content moderation before. From third-party fact-checking to its recent shift towards user-driven community notes, this battle to appropriately moderate is nothing new for them. While Zuckerberg assures that content moderation focuses on high-severity violations, critics argue that actions, such as these black market trades, highlight major lapses. Both investors and everyday users are keeping a close watch. With financial analysts optimistic and black markets defying policy, Meta Platforms is making headlines not only as a stock market darling, but also as a lightning rod for controversy. We want to hear from you. What do you make of the buzz around Meta's investment activities and the revelation of black market account trading? Are you bullish, bearish, or avoiding the Meta waters altogether? And what are your thoughts about Facebook's content moderation methods? Drop your thoughts in the comments below, and let's get the conversation started. Your insights might just make it to our next segment. All right, tech-savvy friends, let's zero in on Microsoft and discuss whether you should click that buy, sell, or hold button in light of today's news. Today, we're dealing with a juicy bit of drama between Microsoft and its close buddy, OpenAI. Microsoft stock took quite a tumble, falling 3.7%, largely due to the whispers of OpenAI potentially splurging $3 billion on AI competitor Windsurf. Now, this isn't directly Microsoft's doing, but it's all about the ripple effect. Investors are jittery with the thought that OpenAI's potential big spend might not bode well for Microsoft's scale gets out of its partnership investment there. But hold on just a second. Before you hit that sell button, let's take a closer look. Microsoft's financial standing isn't slipping alongside its stock. It has a rock-solid foundation, with alluring metrics like a price-to-earnings ratio signaling it might be undervalued compared to industry norms. It's got the kind of sturdy financial health, low debt to equity, and decent return on equity that would even calm a roller coaster-loving daredevil investor. So what should you do? Given the fundamental strength Microsoft is showing and the fact that the OpenAI news might just be a short-term ripple, this feels like a hold or even a buying opportunity to get in before the price bounces back. Remember, stocks experience ups and downs, and sometimes zigging out on short-term wobbles can make you miss out on long-term gains. But hey, I'm just the messenger flying through today's headlines. Do your research, dig into the numbers, watch the situation unfold, and make the call that fits your financial goals and risk tolerance. Always make sure to wield your research wisely before diving into stock investments, because it can be as unpredictable as tech innovation itself. Today was nothing short of a roller coaster for tech stocks on the NASDAQ, folks. Google's got a legal storm brewing with a £5 billion lawsuit in the UK, all while turning up the heat globally with new geothermal energy efforts in Taiwan. Microsoft shares dipped, partially due to ripple effects surrounding OpenAI's rumored acquisition talks with Windsurf. Yet despite this hiccup, our tech giant remains financially robust and attractive. Over at Meta, the intrigue mounts as whales show keen interest, and Facebook grapples with scrutiny over black market account trading. If you found today's recap as thrilling as we did, remember to smash that like button, subscribe, and share the tech love with your friends. Make sure to tune in tomorrow for another action-packed tech news roundup. Your clicks and shares fuel our next adventure in the world of technology. See you then.